Have you ever dreamed of opening your investment account and discovering that a couple of smart choices from years ago have turned you into a millionaire? It sounds like something out of a movie, doesn't it? Well, today, I'm going to show you how that movie-like scenario can become your reality in the world of stocks. Finding the right companies to invest in isn't about chasing fleeting trends. It's about spotting those rare gems that are set to dominate their fields, constantly innovate, and reward their investors year after year. Today, I'm going to reveal two incredibly strong stocks that have the potential to make early investors very wealthy over time. These aren't just any ordinary stocks. They're the kind you buy, hold on to, and never let go of because their growth potential is just beginning. If you're looking for a way to build lasting wealth for generations through intelligent investing, this video is for you. These two companies have solid business models, forward-thinking leaders, and products that the world simply can't function without. And the exciting part? It's not too late to get in on the action. These companies are only scratching the surface of their long-term potential. Before we dive into the details, remember that stocks that can make you a millionaire aren't about fleeting hype. They're about solid foundations, impressive earnings, and the ability to thrive in any market situation. First, please take a moment to give this video a thumbs up. Share it with your friends and hit that subscribe button. Let's aim for at least 300 likes. It would really help my channel grow. Now picture this. A staggering 90% of the world's goods are moved across the oceans. Every package you order, every gadget you buy, every raw material that powers industries, they all depend on global shipping. And at the center of this trillion-dollar industry, there's a company making significant waves. I'm talking about Zim Integrated Shipping Services, ticker Zim. Established in 1945 and headquartered in Haifa, Israel, Zim is a leading force in container shipping. Known for its focus on customer satisfaction, advanced digital logistics, and a fleet of state-of-the-art, environmentally friendly ships. With over 130 vessels, a presence in more than 100 countries, and a strong position in specialized cargo and express shipping routes, Zim is more than just a typical shipping company. It's a true industry innovator. Did you know that Zim was one of the first shipping companies to order a large number of LNG-powered vessels, showing a commitment to sustainable energy? So why should investors consider Zim as a stock to buy and hold for the long term? I see this company as a leader in a specialized market. Unlike its larger competitors, Zim focuses on high-value premium shipping routes, which allows for better pricing and efficiency. Instead of owning all its ships, Zim leases most of its fleet. This means lower capital expenses and greater flexibility to adapt to changing market conditions. As a pioneer in LNG-powered vessels, Zim has made significant investments in liquefied natural gas ships, reducing emissions and lowering fuel costs. Zim has rewarded its investors with billions in dividends in previous years, making it an attractive choice for those seeking income. Unlike traditional shipping companies, Zim integrates AI-driven route optimization, blockchain for secure transactions, and smart container tracking, positioning itself as a leader in innovation. Now let's look at the numbers every investor wants to know. Zim's Q4 and full year 2024 financial results. And let me tell you, the results are nothing short of a remarkable turnaround. Zim reported total revenues of $8.43 billion for 2024. That's a 63% increase compared to 2023. Why is this significant? Because it shows that despite economic challenges, the demand for Zim's services is booming. From a loss of $2.69 billion in 2023 to a profit of $2.15 billion, that's a massive shift. This means Zim is not only back in the black, but thriving. Zim's earnings before interest, taxes, depreciation, and amortization, EBITDA, jumped to $3.69 billion, a 22% increase year over year. For investors, this translates to one thing: stronger profitability and financial health. If you're enjoying these stock analyses and finding them helpful, please take a moment to like this video and share it with your friends. Your support helps my channel grow and allows me to bring you even more valuable content. In 2024, Zim transported 3.75 million TEUs, or 20-foot equivalent units, which is a 14% increase from the previous year. More shipments mean more revenue, and this growth demonstrates that Zim is expanding its market share. The average freight rate per TEU increased to $1,888, a 57% jump from 2023. In Q4 alone, the rate was $1,886, reflecting a 71% year-over-year increase. What does this tell us? That Zim has pricing power in a fluctuating shipping market. Here's what dividend investors will love. Zim declared a fourth quarter 2024 dividend of $3.17 per share, totaling around $382 million. But there's more. The total dividends for the year stand at $961 million. That's 45% of the annual net income being returned to investors. Zim ended 2024 with a strong cash position of $2.8 billion and minimal long-term debt. This means the company is financially stable and has plenty of funds to invest in growth. So what's next for Zim in 2025 and beyond? I foresee strategic expansion in high-demand routes. With the global supply chain changing, Zim is aggressively expanding into high-growth trade lanes, particularly between Asia and North America. The company is investing heavily in automation, AI-driven route planning, and smart tracking technologies to stay ahead of the competition. As fuel costs rise, Zim's early investment in LNG-powered ships will help them maintain lower operating expenses and lead the way in sustainable shipping. Zim estimates adjusted EBITDA between $1.6 billion and $2.2 billion for 2025. If trade conditions improve, this could easily exceed expectations. Should you buy and hold Zim forever? Zim is more than just a typical shipping stock. It's a dynamic, resilient, and innovative company that has proven its ability to navigate challenging times and emerge stronger. With record-breaking earnings, high dividends, cutting-edge fleet upgrades, and a smart, asset-light model, Zim is one of the best shipping stocks to buy and hold for the long haul. So what do you think? Is Zim a stock you'd consider adding to your portfolio? Remember, as exciting as this stock is, always do your own research before making any investment decision. The stock market can be unpredictable, and it's essential to be well-informed before investing your hard-earned money. Let's move on to the second stock. Imagine a world where business meetings, virtual events, remote work, and even doctor visits all happen with just a single click. Well, you don't have to imagine. It's already here, and Zoom Communications Inc., ticker ZM, is the company leading the way. Founded in 2011 and gaining global recognition during the pandemic, Zoom transformed how we communicate. But what many people don't realize is that Zoom has evolved far beyond just video calls. Today, it's a multi-billion-dollar communications giant offering enterprise-grade video conferencing, AI-powered collaboration tools, and a full suite of business solutions. And the best part? It's still growing. But why should investors consider Zoom as a long-term buy-and-hold stock? Let's break it down. Zoom isn't just for casual video calls anymore. It's a comprehensive business communications platform offering secure and scalable solutions for Fortune 500 companies, governments, and healthcare providers. With Zoom AI Companion, Zoom is bringing the future to your meetings, real-time transcriptions, automated meeting summaries, smart scheduling, and AI-powered chatbots. This isn't just a video tool, it's an intelligent productivity ecosystem. Zoom has expanded into Zoom Phone, a cloud-based business phone system, Zoom Contact Center, AI-powered customer support solutions, and Zoom Events virtual conference hosting. These aren't just add-ons, they're billion-dollar opportunities. Companies worldwide are adopting hybrid work models, and Zoom remains a top choice for secure, high-quality remote collaboration. This is a major trend that's here to stay. Did you know that Zoom was originally created to make video communication easier for engineers working remotely? All right, let's look at the numbers. Zoom's latest financial results prove that this tech giant isn't just surviving, it's thriving. Zoom generated $1.18 billion in revenue in the fourth quarter, marking a 3.3% increase year over year. While this might seem like moderate growth for a company that experienced explosive pandemic-era expansion, it indicates stability and continued demand for its services. If you're finding these stock analyses helpful, please take a moment to like this video and share it with your friends. Your support helps my channel grow and allows me to bring you even more valuable content. Thank you. For the full fiscal year, Zoom brought in $4.67 billion, reflecting a 3.1% increase compared to 2023. More importantly, this growth was consistent across international markets, demonstrating that Zoom is solidifying its position as a global leader. Here's where things get really interesting. Zoom's enterprise revenue hit $706.8 million in Q4, up 5.9% year over year. For the full year, enterprise revenue stood at $2.75 billion, up 5.2%. This shows that Zoom is successfully moving beyond individual users and securing large corporate clients. Zoom isn't just making money, it's also keeping it. Operating cash flow for the full year reached $1.95 billion, up 21.7% year over year, with an impressive 41.7% cash flow margin. This means Zoom has plenty of cash on hand to invest in innovation, acquisitions, and stock buybacks. One of the key takeaways, Zoom's profitability is improving. Its GAAP operating margin climbed to 19% in Q4, up 430 basis points year over year. Non-GAAP operating margin, a very solid 39.5%, up 80 basis points year over year. Zoom's high-value customer base is growing rapidly. The number of customers contributing over $100,000 in trailing 12-month revenue increased by 7.3% year over year. This proves that businesses are spending more on Zoom's premium offerings. Zoom is returning value to its shareholders in a significant way. In Q4 alone, it repurchased 4.3 million shares of its own stock. For the entire fiscal year, it bought back 15.9 million shares. This reduces share dilution and boosts earnings per share, making Zoom even more attractive for long-term investors. So what's next for Zoom? Well, in my view, the company is just getting started. Expect to see more AI-powered tools to streamline workflows, boost engagement, and enhance virtual meetings. Zoom is aggressively targeting Fortune 500 companies, healthcare organizations, and even government agencies looking for secure, scalable communication solutions. With nearly $2 billion in cash flow, Zoom has the flexibility to acquire smaller tech firms and expand into new markets. If Zoom continues to grow its enterprise revenue and AI-powered services, its stock price could see significant upside potential. Here's the core message. Zoom isn't just a pandemic-era phenomenon, it's a long-term tech powerhouse with rising revenue, strong profitability, expanding AI innovation, and a growing enterprise business. Zoom is proving it has staying power in the digital age. For investors looking for a stable, profitable, and forward-thinking tech company, Zoom Communications Inc., ZM, is a stock worth considering for the long haul. These are two powerful stocks that are shaping the future of global trade and digital communication. ZIM Integrated Shipping Services, a global shipping leader riding the waves of increasing freight demand, efficient logistics, and substantial dividend payouts. And Zoom Communications, a tech leader transforming how businesses collaborate, leveraging AI, cloud-based solutions, and an expanding enterprise customer base. Both of these companies are strategic, forward-thinking, and financially robust, making them compelling choices for long-term investors who want exposure to industries that keep the world moving and connected. But remember, always do your own thorough research before making any investment decision. These stock plays are exciting, no doubt, but real wealth? That's built with a long-term strategy. And part of that strategy isn't just picking the right stocks, it's making sure your portfolio can withstand anything the market throws at it. Recent trade policies, including new tariffs, have introduced volatility into the markets, prompting investors to seek stable assets. That's exactly why gold has been a staple in portfolios for centuries. Gold has historically served as a reliable store of value during such times, with prices recently reaching record highs. It's one of the few assets that always has demand, no matter what happens in the economy. I've found a company that offers Americans a free guide that walks through exactly how to add real physical gold to their retirement accounts. No gimmicks, no obligations, just solid practical knowledge. Click the link in the description and grab your copy, because the best investors don't just think about the next year, they plan for the next decade.